Are the previous recordings posted in the Discord? Yes. The previous recordings are in the Discord and they're on our YouTube. So if you unsubscribe to our YouTube, you can see it there as well. So we're putting them there on both. All right, let me share the screen. All right, so this is stockcharts.com. This is a free website that I like to use to chart my stocks, especially if I'm doing a swing trade or a long-term trade. I like to use stock charts. If you want smaller time frames, because stock charts only has weekly and daily on the free version. I know if you have the paid premium version, then it will give you minute charts, 5-minute charts, 15-minute charts for day trading. But with that, I just go over to TradingView. But this is perfect for swing trades and long-term trades if you don't want to pay for it. And someone had a question: price and time for dividends course. So the dividends course will be out Friday, and it's going to be $50 for that course. Gerald, just to answer your question. All right, so normally I start off by looking at the SPY. No problem, Gerald. I normally start off by looking at the SPY, the S&P 500, but this time I want to look at something different. I want to look at Bitcoin because on the weekends when the market is closed, if you ever want to know which direction the market is probably going to move in, you want to check Bitcoin. Because, for instance, if there's a major drop in Bitcoin, let's say on Saturday, and it doesn't recover Sunday night, that means that when the market opens, we're going to see a ripple effect happen in the market as well. Also, if Bitcoin spike up, let's say by a large number or a large percentage, the same thing is going to happen in the stock market. That's what we've been monitoring. I want to say that's been happening for maybe a year. So, and every time we checked it out on Sunday or Sunday night, if Bitcoin is up or is doing well, then the market reacts accordingly. So let's look at Bitcoin. And Bitcoin on stock chart, the only thing you have to do is $, the ticker, and then USD, because we're looking at Bitcoin to US dollar. And it's going to give us the chart. Let me zoom this in. So can everyone see this? Or do it? Well, do I need to make it bigger is what I'm thinking. Okay. Silence means yes. Or yeah, everyone's good. All right. So looking at Bitcoin, right now it's at $18,785.42. So we'll break down the chart and what I see for it a little bit later on. But let me break down the different parts of the chart. So if you're new to stockcharts.com, again, only thing you need to do is type the ticker or the company name in the symbol section, and then it's going to default on the daily for you. You can also change it to the weekly. The only thing that this means when it says period is that each candlestick that you look at represents the period. So if the period is daily, each candlestick, regardless of how long it is or how short it is, it still represents one day. If you change it to weekly, that means that every candlestick that you see is going to represent a week. But it defaults to daily. So each candlestick right now that we're looking at, even this long one right here, that's still one day. It's not multiple days. And then again, even these small ones are still one day. They're just showing you the range of the day. All right. And when you're looking at these charts, each thing is broken down and sectioned off in its own chart. So you have the RSI. This is one indicator. Then you have the main chart. You have volume, and then you have the MACD. So what I like to do is start off by looking at the RSI, because that's going to tell you if the stock is overbought or underbought. And that's going to help you make a decision on if you need to execute a trade, if you need to enter the trade, or if you need to get out of a trade that you're already in. So the RSI stands for the Relative Strength Index. And this chart is just telling you, again, if something is overbought or underbought. So this bottom line, that solid bottom line, represents 30. This one right here represents 50. That dotted line in the middle represents, this represents 70. This is 30. Dotted line is 50. My bad. All right. So the way that you read this is that if a stock, for instance, we see that Bitcoin was down here 3 times, close to 30. that means that people are selling it too much. That means that it's oversold. So people are selling it way too much, and then people are buying in this zone, and we see how it's bouncing around before it took a larger bounce here. And so in the middle at 50, you can call it warm. If 30 is cold, 70 is hot, 50 is warm, it's right there in the middle. A lot of people like to wait until it's above 50. My strike zone is 45 to 55, and it has to be pointing up. So right now it's at 40.33, but it's kind of pointing down. So I wouldn't touch it. But if it was pointing up, for instance, if we look at this part of the chart, it's pointing up. It's around 50. If it's between 50 to 55 pointing up, that's a good sign for me to go ahead and set up a swing trade to buy stock and sell it once the RSI gets around 65, 70. Sometimes you can have an RSI that's above 70. I'm not going to say that 70 is the highest. You see, we have 90 right here. Rarely have I seen 90s. I've seen a 108 before, but that was off like a meme stock in a short squeeze. So it's not like you're going to see that every day on all your stocks. But again, 30 to 70. Again, my zone is 45 to 55 pointing up, and I like to get out around 65, 70. Do I have any questions about the RSI, or are we all good? Again, I'm going to take silence as a yep. Ladarius, we're good. All right, Regina says we're good. All right, she spoke for the group. All right, so let's move on to the next chart. This chart right here, I like to separate the volume first. So volume is right here. I'm going to explain what volume means in just a second, but I don't like how it's behind this chart and it's faded. So I don't like seeing that. So what I would do is go down to the chart attributes and just change volume to go ahead and separate that. And once you separate it again, now you have this clean volume chart, and it's not obscuring your view of this chart right here. But all right, so this chart that we're looking at, this body of a chart right here, this is the main chart, and we know that we're looking at Bitcoin and we're looking at the daily time period, and this is telling us its current price. So right now is at is at $18,803.08, and it's telling you right here. You can also look over here, and this is going to highlight in this bold black font. Every time you look over, you want to know the price, you can check here or you can check here. All right, and then you have your MAs. All right, so a lot of people get confused on these MAs, but your MA is simply your moving average. So this is telling you the average, whatever number you have beside it, is telling you the average periods added together and divided by that number. So for instance, if we're looking at the MA50, that's just your 50-day moving average. So this is your average over the last 50 days on the stock price. So the 50-day moving average is in blue. So that means that this blue line is the 50-day moving average. So the 50-day moving average, and you don't even have to look over here if you don't want to, is right here. It is a little bit above 21,000 right here for the 50-day moving average. And a lot of people like to use the 50-day moving average. Once the stock price is above the 50-day moving average, that means that it's been doing better than it has been within the last 50 days. And that's a good sign for people to go ahead and get in and do a swing trade to the upside. A lot of people that buy stocks, they like to set their buy orders around the top side of the 50-day moving average. Again, once people see that it goes above, they try to go ahead and buy it up, but sometimes it can reject and come back below. But that's how people use the 50-day moving average. Some use it as a support and resistance line, and some use it as a line to go ahead and buy in. Do I have any questions about the 50-day moving average? All right, cool. So we have the 200-day moving average. It's the same thing as the 50-day moving average. It is just 200 days. So that means that when the stock is above this, that it has been doing better than it has been within the last 200 days. This is a stricter line here. So for instance, Bitcoin is at 18,000. Eventually, when Bitcoin gets around 28 to 29,000, it should be touching this line, unless this line continues to trend down, and then it may be a little lower. But once it gets up to this line, it may reject on its first try, because that's 200 days of averages being added in. So it's a little bit of a tougher line than this 50-day moving average. And you can tell by how nimble this 50-day moving average is, how flexible it is. This one is pretty much going to be a straight line moving in one direction, and you're not going to see any too many curves and bends like the 50-day moving average. But Again, people like to use these as boundaries. So do I have any questions on the moving averages or how they work? All right, cool. Let's go on to volume. So volume is just telling you the amount of buys or sales on the day. So volume itself is just the total buys and sales on the day. So if somebody buys stock and sells stock, that counts as volume on the day. It's just the amount of trades happening per day. That's not the important part when you're looking at volume. When you're looking at volume, you want to look at the black or the gray, whatever you want to call this color right here. I call it black. And then you want to look at the red, because that's telling you what type of volume it is. So if it's red volume, for instance, these three periods right here on the histogram, they're telling you that this is selling volume. So the volume can be high, but that doesn't mean that the stock is going to go up or the asset is going to go up. In this case, Bitcoin. Some people will look at this and say, well, on this day, the volume was 5 times higher than it normally is, but people were selling on that day. And we can tell, for instance, look at this volume spike right here. Volume shot all the way above 175K. But then when you look at the asset, look how much it's tanking. And look at this one candlestick right here. That's a large drop in one day. And again, that's why you can't equate high volume to the stock or asset going up. You want to know what type of volume it is. If it's a black bar that's going up like this, then okay, we'll see the asset go up. But in this case, again, this is a lot of sales happening, and it was notated here. So again, when you're looking at it on the day, when the stock market is actually open, check the type of volume that's happening for your stock, and then that'll tell you if the stock is going to be going up or down. And the colors will change depending on what's taking the lead. So if buying is taking the lead at that time, volume-wise, it's going to show gray, and then if selling is taking the lead, it's going to show red. So do I have any questions about the volume? All right, cool. So let's go on to MACD. All right, so the MACD simply stands for your moving average convergence divergence. So the way I like to put it is a simple relationship between the two lines. And what are the two lines? The two lines are buying and selling pressure. So this is volume. This is buying and selling volume. These two lines are buying and selling pressure. So for instance, if black is underneath, so, oh, well, let me tell you that first. Black represents buying pressure. Red represents selling pressure. So if red is on top, that means that the pressure to sell is going to be pushing the asset down. And then if black is on top, that means that the asset is going to try to go up. So for instance, if we look at this period on the chart, we see that black was up before this crossover happened, and then red was on top. So while black was up, stock was up here, or the asset was up here. Bitcoin was up here. When this crossover happened right here, it dropped it. That MACD crossed over to the sell side. So sell is on top. It dropped it until we had another crossover right here that changed the trend, and it slightly trended up from this point, from the crossover point to up here. And then we had the buying pressure on the top, and it stayed on top for a while until it got here, which is around this area. And then we had it tangled itself up, but then red ended up winning, which caused another drop. So what you want to do with this is look at this side of it and see what's on top. So right now we got red on top. So red means that the asset is going to try to go down, but they're extremely close. So if black just ticks up just a little bit and crosses over, and black is now on top, we're going to see something like this happen. In this area, that's when black got on top of the red, which the buying pressure took over the selling pressure, and we seen this pop right here. And then they crossed right back over, and then there was another drop that came. So right now, they're almost neck and neck, but red is still on top. But again, if we had a pop from the buying pressure to cross over, then we're going to see another jump in the upward direction. So do I have any questions about the MACD and how it works? Perfect, perfect, perfect. All right. So let me show you support and resistance lines, and then we can get into the pattern of the week with Mark. All right, so this is the annotate function on Stockcharts. Annotate just lets you draw on the current chart. And if we look at the current chart right now, it's at 18,859.76. What you can do is come over here and pick the horizontal line. You can also do the auto support and resistance. Once you get used to manually setting your support and resistance lines, then I recommend using this. But right now, just try to get used to setting it by using the horizontal line. So the way that you will use it is that you need 3 touches within the same or around the same price. So it may be $1 above, $1 below, or in this case, since we're talking about thousands of dollars, it may be a couple hundred above or a couple hundred below. But for instance, if we look at this 20,000 line right here, we see that the stock, or I keep calling it a stock, Bitcoin is not a stock, but the asset likes to hang around 20,000. And once it can drop up and down, but once it drops, it gets around this 20,000 and then it starts to trade sideways. And again, we only need 3 touches, but right here, we can see that it sat here for a little bit longer than a week. It did the same thing right here. So when it popped here, it came down, it still just hung around 20,000 again. So what we can do is put this here, put a horizontal line there at 20,000. So since 20,000 is above 18,000, that means that this is our resistance. Resistance is your ceiling. So once you get up to this resistance, that means that, again, yeah, once this price starts to rise up to the 20,000, the closer you get, the more likely you'll have a rejection, unless we have another push through this level right here. And then the next level looks like it'll be between 21 and 22,000, about right here, because it trades sideways again and it's more than 3 touches. But right now our ceiling is at 20,000, and the next thing we need to do is find a floor. So if we're looking at a floor, we're looking at the daily. This is going to be really tight because we're only looking at the daily. But if we're looking at it, then it's going to be slightly below this 18. So 18 is really close to support. We can see that we have a couple of touches right here, which is pretty much around the same price that it's at right now. So undo that. All right, so right now we're in this pocket because it's slightly above. We're looking at this candle right here. It's slightly above into the zone, but if it pushes down, then it looks like we'll be 18,800 and under towards 18,000 even. So, and again, if you want to make a better support or resistance, if you can't find one, then you can just change the time period. So the period is daily, so it's only showing us days. But if we move back to weekly, then you'll get more of the graph, and then you can also add it on. Also, you can add more time to your chart. You would have to go down here and change your range and add more days. Like you can add 5 years to it if you wanted to, but on the daily, I think that this suffices, especially if you're just looking for a swing trade. You might buy in on Monday and sell on, let's say, the following Wednesday. So you only need to look at a few days to figure out what you need to do. But again, your support should be below the current price. So we're slightly below this. This is $59 above our support. So it's still above it, but it looks like it's right on the line. And then we have our ceiling right here at 20,000. So that means that it's within this range and it's going to bounce around in here unless it drops below its support. And again, if it drops below its support, then this support right here will become the new resistance. So it'll be bringing the ceiling down a notch. And then we need to put another floor on it, which should be around 18,000, or about, I think I had on one of my other charts, I think it was about 17,500 actually, but you can't see 17,500 right now. You only can see 18,000, but that's how your support and resistance line works. And that will help you enter and exit trades, because for instance, if this is moving up, that's why the RSI, reading the RSI is important, because if the RSI was at, let's say 45 pointing up, and we just entered this trade zone, then we may bounce up to 20,000. You have to check some other indicators as far as the MACD to see if we have any crossovers or anything that's going to help push us up towards it. You also will probably have to check news, but this will give you a good idea of, okay, it's not going to go from 18,000 to 40,000. It has to at least check in at 20,000, because I see where I set my resistance at, and I see that it's more than 3 touches going up towards it or coming down through it. All right, so do I have any questions about setting your own support and resistance lines? And let me check the chat. All right, no questions in the chat. All right, cool. So, oh, that's Regina. All right, Regina spoke for everybody again. I appreciate that, Regina. Everybody's good. All right. Now, again, as we move on through the session, if you have any questions, again, if you need me to reiterate, or if you need Mark to cover the same rules and logic that I just went over for this chart, just let us know. Again, we're here to make sure we all get a decent understanding of what's going on and how we can make money in the market in its current state. So I'm going to go ahead and hand it over to Mark if I don't have any other questions, and he can cover the pattern of the week.
Appreciate that, Darius.
Oh, hold on, Mark. Yeah, I just saw that. Let me see. Open up the chat. Let me stop presenting. All right, Regina, what's your question?
Hi, can you hear me?
Yes.
Hi, everyone. Hi. I had an issue where I picked a stock. It was actually PDD, and I thought I was ready to trade, and I went in, and then I set a stop loss. But what happened is that it triggered the stop loss real soon, so I realized that I had put my stop loss too close, right?
Yeah.
But then because when I went in, it was like clearly going up. It was like, to me, a clear time to go in. It was just the stop loss was too close. I just was like, I don't even know how to go back in a trade when you get stopped out so fast. Like, what do you do? Do you wait for the setup again?
Yeah, I mean, it depends on how much it ran in either direction. Like, if you want it, were you playing options, or were you just buying stocks and swing trading?
I was swing trading.
Okay, so with a swing trade, you want it to go up. I mean, unless you're, well, no matter what, if you're swing trading, even if you're swing trading on the inverse, you still want it to go up. So if it stopped you out, as long as it didn't stop you out outside of profit, like if it stopped you out and you took 10% profit instead of taking 40%,
right,
then that's okay. You can still see if there's room to go. I would just check the RSI, and I'll also check the MACD first before jumping back in. So yeah, you may need to reset up if it just ran too much in one direction, like if it dropped heavy on you or if it popped up on you too much.
Okay. It just seemed like my stop loss was just too close to the buying price. So I needed just a wider range, because you know it pulled back a little bit, just a little bit, and I was just too close. So that's what I saw. But I'm gonna check the MACD and the RSI next time also before I go back in.
Yeah, and if you have any questions about it, you're in the Discord, you can just post the stock and then ask us what we think about it, and we can go through, we can walk through the trade together.
Okay. So, oh, that'd be great. Thank you.
Yeah, just drop it in there so we can all discuss, what's going on with the stock and what's not.
Oh, that's great. Thanks so much. I appreciate that.
Yeah, no problem.
I'll do that.
All right, thanks for that question. All right, so does anyone else have a question before I hand it over to Mark? All right, I'm going to take that as a no questions. All right, Mark.
Appreciate it. All right, so for the pattern of the week this week, we're going to talk about the hammer pattern. And it's a hammer pattern is basically a trend reversal pattern. So it's letting you know that a stock that was once going down in price is going to turn around and start to go up. So you can use this two different ways. You can use this as an entry point. So once you see this pattern form, the next candlestick should be a green candlestick or a bullish candlestick, and you can get into a trade off of that one. Or you can use this as a exit point. So if you're doing like a put option, or if you're doing a stop loss, for instance, you set up a stop loss. When you see this happens, this is a good indication to say, if you're doing puts, excuse me, this is a good indication to say, hey, this is the end of my put run. This is probably going to be the highest. This is probably going to be the most profit I'll make in that put, and so you can get out of it like that. So that's what the pattern is used for. It forms just off of one candlestick, and you're going to see this long. You'll see a long wick that forms. As you can see, the shadow. They call it the shadow. This is the wick of the candlestick, and this is basically the lowest the price has been, and all this other black candlestick, or the black wick, excuse me, is just the price where it was before it closed. So that's just indicating all the prices it went through before it closed on the day. So for this one, again, the stock price opened up because this is a green candlestick. The price opened up this high at this price. It went all the way down. It reached the low. But at the very end, when the stock price closed, we see that it closed right here. Okay. So we see the price ended up closing right here. And vice versa for the red candlestick. It's the same thing, but just vice versa. And this is how you'll normally see the candlestick. This is the hammer candlestick right here. And this is how it forms. As you can see, the price was declining in value. So we had a high up here. It's not a specific number, but the high is up here. We see the price going lower, 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 lower. We see consolidation happen. It formed other patterns, but then you see this hammer stick pattern that forms right here. This is the hammer pattern. And once this pattern forms, you're saying, hey, this is basically the bottom of the stock. It shouldn't get any lower than this. And that confirmation is given to us by this green candlestick we have here. So once you see this green candlestick, this is a good indication to say, hey, the price is going to turn around. This was the bottom, and you can start getting into trades at this point. Okay. Do I have any questions so far? Okay, good, good. So the hammer stick is a relatively easy pattern to look at and digest. That's why it's so quick. Again, there's only one, you're only viewing one candlestick. Yeah, there's a downtrend that needs to happen before you see this candlestick form. But once you see this candlestick form, there's only one candlestick you're looking for. You're not looking at a whole bunch of different candlesticks to see the pattern. It's literally only one candlestick, and it's going to be at the bottom of that stock price. It's normally going to trade around a support line. So as you can see here, this is probably, if we go all the way back, or if we go further back into the price action for this stock, this is probably going to be a support line that could be drawn right here. So it's only going to happen on the support line. It's going to let you know, like, hey, this is the support line that the stock price is probably going to use, and it's going to turn around from there. Here are just some rules to follow when you see a hammer pattern, or you're trying to trade this hammer pattern. It's relatively easy. Again, the prior trend, the stock price needs to be in the downtrend. And then once that downtrend happens, you'll see that hammer pattern form out of one of those candlesticks. And once you see that hammer pattern form, you can use that as an indication that, hey, you can predict that the next candlestick is probably going to be a bullish candlestick. And once that forms, you can then get into a trade. And if you want deeper analysis into this candlestick pattern, you can go to investopedia.com and just type in the hammer candlestick, and they'll pull up the article that you can read and read the full analysis of this pattern. And if I go to the SPY, while the SPY has been getting beat up the past few weeks, or this past week, it was getting beat up pretty much about the Feds raising interest rates. It's actually forming a hammer right here. This is a hammer pattern that's forming right here. Will it play out? Again, that's why we're going to wait until the next candlestick forms to see if it's a green candlestick. If it is a green candlestick, then we're going to see this stock price trade and try to get up to 370 or 380, excuse me, around this 380 price. It's almost at 370. This is going to be 375. So if we see a green day on Monday, we'll see this candlestick, or we'll see the SPY trade around 375. And if we see that, then we know that it could be a good opportunity to get into a trade and play the upwards momentum. But it is a lot of factors that's going to play a major role in that, especially with, again, the fast raising interest rates. Just watch, like Ladarius said, just keep an eye out on Bitcoin and see what Bitcoin is going to do, and that'll help you justify if this would be a good trade or not to be able to trade this hammer stick pattern. But it is looking like even at the bottom, it's touching the support line right here. We see it got to 365 and then tried to fight back up from there. Do I have any questions about the hammer stick pattern? Okay, good, good. Now, do I have any questions, or does anyone have any stocks that they wanted us to look over and talk about? Maybe they wanted an extra eye on them. Okay.
Yes, I do.
Okay, go ahead, Didi.
VOOV.
VOV. Vanguard. Okay. So Vanguard again it looks like they're trading the same way to SPY. It's an index, so it's ETF. So I figured they do have this hammered pattern forming, but again, we'll probably have to wait until tomorrow when the market opens to see how it starts to trade out for the week or for the day. If we go on the daily chart, we see we had a MACD crossover. The buying pressure is under the selling pressure. It just had this crossover that could trend more downwards or let us know that the stock price is going to trend more downwards. And just like the SPY, they're trading on this support line just about. And the next support line, if it does continue to go down, I'm thinking that it's probably going to go and try to test this 200-day moving average at 120. That's what I'm potentially seeing happening. It is making it's not, let's see. See, it made a double top right here. So that's a bearish indicator, like, the stock price is going to go down. It also looks like on this weekly chart, it's creating a pattern called the 3 black crows. And that's basically 3 bearish candlesticks in a row. They're going to form in a row. So potentially next week, this is showing us that we're potentially probably going to be in another red or bearish week. So the stock price is probably going to continue to go down and trade into this 200-day moving average, this red line. That's what I'm seeing on the weekly. The RSI level is at 37 and it's trading downwards. It's probably going to get closer to this 32 RSI level and try to reject it from there. It's looking like. That's what I'm seeing.
Okay, thank you.
Mm-hmm. Did you have anything you was trying to trade? Or did you have any stop losses, or did you set up any resistance?
I actually have the stock. I was just trying to see what the thoughts were about it. I'm trying to figure out what I want to do.
Okay. When did you get into the stock? When did you start buying? Around what price?
About 85.
About 85. Okay, so you're still in it. You've been in it for a while.
Yeah, I'm still in the game right now. I'm just trying to see what I want to do with it, though.
Okay. Yeah. So it looks like it may pull back a little bit. Maybe test this 200-day moving average for sure.
Okay. Thanks a lot.
Yes, no problem. Does anyone else have any stocks that they wanted to look over? Go ahead, Isaac.
Yes, Nintendo. And I'll tell you ahead of time, I was unloading my Nintendo shares. And I already sold most of them. I have 10 shares left. My cost basis is $58 and it climbed all the way up to 54. I'm just trying to see, do you think it's gonna go back up anywhere near that? Because I sold some because I was like, you know what, I want to go ahead and get rid of some of them. I just don't. I don't want it to go under $50.
Yeah.
That's really.
And
what I'm
it's
looking at.
on the day. Let's start off with the weekly. See what we see on the weekly. Okay, so on the weekly, it's been consolidating. Even the MACD has been consolidating. On this weekly, they do have, it looks like a death cross that's about to happen in 50 days, going to cross under the 200-day. And it's been using this 55 range right here. It's been using 55 as its support line. Excuse me, as its resistance. And yeah, the support area is about 52, but it looks like it's going to try to break. It looks like it may break under that. Again, it's just been consolidating this past few weeks. It's been a few months. It's been consolidating, and RSI is sitting at about 42. Let's look on the daily again. The thing that concerns me, it can potentially get back and hit 50 because of this MACD crossover that can potentially happen right here. So this MACD crossover that can potentially happen could, because it's trading so close to a support area at 52, that if that MACD crossover was to happen, it could break under and go back down to 50, because that's the next support area that we'll see, that we'll have here. It's at about 50, 52. This is probably about 51, 51.50. So it's yeah. I'm trying to see if I don't see any patterns that's forming. It's been a lot of choppiness, but consolidation at the same time up in this area. A lot of consolidation. It's been consolidating in between 54, 50, 55, if you want to call it, to 52, 60, 52, 50.
Okay. Yeah, I probably got a stop loss somewhere around 51,
Mm-hmm.
you know, and I would sell it for as low as 50. Just take
Yeah.
my losses.
Yeah. Now, did you do a call option or did you do like actual equity?
I bought shares, but what I found is with my ADRs, I know nothing. And so I've been getting rid of them. Like I can't really look up all the info I want to find on them. And I don't like being in the dark. So I had like 20 shares recently and I sold 10 and then I'm trying to get rid of the other 10.
Mm-hmm. Okay, yeah.
And then I did have one more, which was Rivian. Now, Rivian, I bought in at 30, and then I bought in again at 32. So, like my cost basis is 31, and I see it going up and down. I just don't know. You know, I want to buy some more, but I don't know if it's going to fall under what I paid. You know, I'm just trying to figure that one out.
Yeah. Okay. $30 and $40. So it's pretty close to the support. It's pretty close to this $30 support. Trading at 33.50. We had this MACD crossover that happened where the buying pressure is under the selling pressure. It tried to test this 50-day moving average and it broke under it. It looks like it's forming an inverse cup and handle, which is bearish. You can even call this, if you wanted to, like a double top right in this area. But it looks like it's actually forming the cup of the cup and handle pattern. That's what I see. 1 second. Inverse cup and handle. So it looks like it's forming this inverse cup, and then it started to pull up. It may pull up and try to test this 30 for the 50-day moving average again. But if it rejects that 50-day, we're going to see this stock price break under this support line potentially. So you say you were doing calls on this? Isaac?
Yeah, hello.
Yeah, look, you say you were doing calls on here on this one?
I do. I have shares and I have calls.
Okay.
But my shares are like $31 average.
Mm-hmm.
So what I'm concerned about is more so the shares is would I sell some of them and then try to see if it falls under, you know, because I want to ultimately buy more. I want it to go lower.
Yeah.
I just don't want to be stuck with 20 shares that I paid $31 for.
Yeah, I understand that. Yeah, if you wanted to be safe, you can take profit, shave off some profits, and then if it does dip, you can get back in with those profits you took out. And that'll average down your costs.
But would you ever get rid of all shares or something if you see it dropping, or do you get rid of some shares?
So that just depends on how you want to play it, right? So that's just It depends on like how long you want to hold it for. If you want, like, if you're only trying to hold it for a short period of time, you can. Sometimes I may, depending on the company, if I think it has a potential of going up quicker, I may just take some profits, and if it does dip, I'll just average down off of those profits I've taken, but I wouldn't get out the entire position.
Okay.
It's really up to like your risk management. Someone had a question.
Yeah, Isaac's mic is echoing. So like if he has it unmuted, it's echoing your voice.
Oh, okay. I wasn't even paying attention.
Oh, sorry about that.
But yeah, so if you wanted to get completely out, you can. If I was you, I would just shave off a little profit, and if it does dip down, I would just use that profit that I've taken out to average down my costs. Because it can't, if it breaks past this 50-day, then it may continue to run back up to 40. So it's in that, that middle range that we're not quite sure exactly what's going to happen. But it does look like it's creating a cup and handle. So just off of inverse cup and handle, so just off of that, I would shave off a little profit if I was you.
Okay. Yeah, I do
Just in
wanna-
case it doesn't do the inverse, you will be able to still get profit if it does continue to go up, and you won't be out the trade completely.
Okay.
Because how long do you say you are thinking about adding more? So you're thinking about holding Rivian for a long term?
Yeah, I want to hold Rivian like it's a Tesla. Like I'm trying to, I feel like I want to continually buy it, but I want to get it for a good rate. So if it drops, yeah, I want to load up on more.
Yeah. So so definitely what I would do is I would just shave off a little profit, and if it does dip, you'll be able to get in at a smaller profit, and you can just add on from there. Even because the more you add on, the lower and lower your average price is going to become. Instead of getting completely out and then it actually turn around and continue in the upwards trend, and you're not in there at all.
Yeah, definitely. Okay, thank you.
No problem. Okay, does anyone else have any stocks they wanted me to go over? Okay, good. So I don't have any stocks to go over today, but what I do want to talk about is this cool little dividends tracker that Darius and I created. So this is basically like the name says, it's a dividends tracker, and it's just gonna keep track of all of your dividend stocks. So it'll help you with determining what dividend stocks you want to put your money in, how much money you want to put in it. You'll be able to use this tracker. So for instance, let's just look at my favorite stock. It's Coca-Cola. So you would just type in the ticker, Coca-Cola, and it's going to generate the company name, and then you can choose your trading type. It's relatively similar to our regular stock trading tracker, but it's just purely based off of dividends. So you can choose out if you want to do a swing trade with this company or long term. For the most part, with your dividend stocks, they're going to be long-term holds because you're going to be getting that benefit of the payout, right? The dividend payout. And you're going to buy companies that are reputable, that are good, and that can withstand your lifespan. And so the next tab you have is right here is the payout frequency. And basically in this payout frequency tab is just how does the company pay out their dividend rate. So, companies can pay out annually, semi-annually, quarterly, monthly, and then we have this special cases, which is sometimes some companies just have a one-time dividend to make their stock appealing to the investors, and they may have a special case where I remember one company, I can't remember the name, but they did a dividend rate of about 50%. They had a 50% one-time dividend payout rate, and it caused the stock to go up because of that dividend payout rate. So that's just a special case tab. For Coca-Cola, I know personally that the payout frequency is quarterly, so I'll just click quarterly. Now, if you don't know the payout frequency, a quick Google search can help you figure that out. So we just go to Google, just type in Coca-Cola dividend payout. It'll let us know. I think I just got it. me go to tip ranks, excuse me. So we go to tip ranks. We just type in ticker, Coca-Cola. And then we go to their stock analysis. It will, where is it at? Dividends, excuse me. So it'll tell us their dividend rate right here. So it tells us how much the dividend is on this tip ranks, but it also lets you know how they pay it out. So they, again, Coca-Cola pays it out quarterly, and that's why I picked quarterly right here for the payout frequency. And then it'll let us know, once you type in Coca-Cola, it's going to generate all these gray areas. And again, it's going to tell you the dividend yield rate, which is 3%. And then depending on how many shares you click, so if you had just 0 shares, this would be 0 yearly payout. But depending on how many shares you buy of the company, so let's just say we buy 1 share of it, it's going to let you know how much money you'll receive in dividend payouts yearly for that. And then with that, with this period payout, this is just going to let you know how much you're going to receive every payout. So again, because we click quarterly, it's going to let us know that every 3 months we're going to receive 44 cents for having 1 share of Coca-Cola. Okay, and then we have the payout ratio as well as the expiration dividend date. Now the expiration dividend date is just going to let you know when you need to own a share of Coca-Cola so you can receive their next dividend payout. So if you own Coca-Cola before 9/15/2020, the next time they pay dividends, you'll receive that 44 cents per share. And Ladarius is going to talk about all of this, especially like the payout ratio. He's going to talk about all of that in his course that he has coming up this Friday. That's going to be released this Friday. And if you change this quarter, if you change from quarterly to annually, again, this payout period is going to change. It's calculating based off of the payout frequency for this period of payout. So it'll let you know exactly how much you'll receive based off of that frequency. So if you, again, quarterly, semi-annually, you just divide that by 2, it'll let you know the price. Or if you wanted to do monthly, it's going to divide it by 12, and it'll let you know how much you will make if they was paying per month a share by just owning 1 share of Coca-Cola. And the price target, you don't have to put this in, especially if you're doing long term, but it's just here for the people that's going to make swing trade some of the dividend plays. They'll be able to still have that price target and the stop loss, and you can always add notes. So this area right here didn't change that much from the stock tracker. The only things that changed were these tabs right here. And it also help you to see like how much shares of one company will have. Like for instance, I talked about AGNC, which is a RIT. The dividend payout yield is 13.8%. So and they pay it out monthly, right? So let's just say if we wanted to, they're $10 a share. So let's say we wanted to invest $1,000 in them. So 100 shares, and it'll let you know how much you'll make every month off of dividends. So if you invest $1,000 in AGNC Corporation, you'll receive $12 a month, basically, in dividend payouts. And you can use that money for whatever you want. You know, you can reinvest it into the company to make your payouts more and more, or you can take it out, maybe use it to pay for a streaming subscription or something. Do I have any questions about this dividends tracker? Okay, good. And so I have one more other thing that I wanted to talk to you guys about. So I'm actually going to be hosting let me get to it. I'm going to actually be hosting a survey session this Wednesday, September 25th. So if you're in the meetup, you can just join through this link on the meetup. Again, just hit share. Oh, excuse me. I'm going to share it with you guys right now. Copy it. Put it in there. If you're interested in learning how to fill out surveys, and surveys are a good way to make additional stream of income. You can make anywhere from $30 or $40 to $300+, just giving different companies your everyday opinions on different products. I literally did about a week ago or 2 weeks ago, I did a survey on Taco Bell, the new burrito wrap they have, and I got paid $75 to taste it and give my opinion on it. I just finished the survey last week for Zaxby's small snack meal, and I got paid $50 to taste they basically paid for lunch. They gave me chicken tenders, dipping sauce, fries, bread, and a drink. And I just ate it for lunch and gave my opinion. It took about 10 minutes, and they paid me $50 for that. I've been in surveys where I've gotten paid $300 just to talk about commercials for Disney for their 100th anniversary. I talked about different commercial ideas and stuff with them, and they paid me $300 for that. So surveys is a good way to make an additional stream of income, and that you can use either in the stock market, or you can use it outside the stock market. You can use it to buy groceries or put gas in your car, just whatever you need to use it for. If you want to make additional money, surveys is a good way. So, and I have this session that I'm going to be teaching you how you should be answering the questions, and I'm going to give you a couple of good websites you can go through and start filling out for surveys on their websites. So do I have any questions about the survey session? Yes, September 28th. September 28th at 7 o'clock, I believe I put, yes. September 28th at 7 p.m. That's when it's going to be, 7 p.m. Eastern Standard Time, too. And it's going to be about an hour long. It may not take the full hour, but I'm just going to go over the basics of surveys, and then I'm going to fill out surveys with you guys to show you how you should be answering them. Yes, no problem. And with that, I'm going to go ahead and pass it back to Ladarius so he can go over his stock picks for the week.
All right, I appreciate that, Mark. Let me my screen pulled up. So what I'm going to be covering is going to be the dividend stocks that I think that if you're looking to build a dividend portfolio, because honestly, especially in the current market, you should have some type of dividend strategy added to your portfolio, because the dividend payouts will help combat inflation. So if inflation is going crazy, that means that the cost to borrow is high, and some of these dividend yields are extremely attractive at this point in time. Now, I have one on my list right now where the dividend yield is 26% and it pays quarterly. So in times like this where the market is dropping, it's always good to be looking at dividend stocks, because normally dividend stocks, they don't move too much in one direction, and they like to hover around the same price, because the investors, when they buy in, they're not selling, because again, you don't buy a dividend stock and sell it, within a month. You only collect, one dividend from it. To build a dividend portfolio, you may have to hold that stock for 3 years or 5 years or 10 years, depending on how good they're performing, and if they are a dividend aristocrat or a dividend king, which I'm going to tell you what that means in just a second. But yeah, dividend stocks right now, they're very, very attractive. And again, I'll show you why chart wise. Let me just pull it up for you. And again, if you have any questions, just drop it in the chat or raise your hand to let me know. It's not sharing yet. Oh, there we go. All right. All right, so Mark talked about the dividend tracker that we were working on, that we created. So this is a copy of it. I don't want to mess with the original one. And so if you all want the same thing, if you want it now in its beta form, you can put your email in the chat, and then we can get this over to you, and you can get the beta. Just for coming, this is a little bonus just for coming to this meeting. We haven't really put this out yet, but it's working properly, and we have it already set up. So if you need it, you can go ahead and drop your email in the chat, and then we can get that over to you. But all right, so I already have a couple of the stocks that I'm going to cover today loaded into this. So the first one is O, and with this dividend tracker, like Mark said, once you type in the ticker, it's going to lay out all of this information for you, and then you just have to pick your trading type and frequency. So we're looking at O, and O is Realty Income Corp. They've quoted themselves as the monthly dividend stock. So they pay dividends every month. The dividend yield is 4.81%. And then this is the yearly payout that you would get. This is the payout period, payout ratio, and the expected date. So what I've done is just added 10 shares for each so we can generate some information. And if we look at it, the current price is $61.81. If we set a price target of $70 for a swing trade, because with a dividend stock, for instance, let's say if you set it to where you want it to swing up to 70 and it's at 61, it can take some time to get there since it's a dividend stock. But the bonus is while it's taking time to get there, you're getting paid in dividends. So not only will you get this profit from the swing, so if it goes from 61, 81 to 70, you're going to get a 13% profit percentage, but you're also going to get the dividend payouts that's going to be happening while you're just holding the stock. So honestly, with this one, since it's paying monthly, it's kind of in your favor if it just hangs around and slowly but surely gets there, because again, the whole time you're holding it, it's paying you. And I think this is one of the best ways to build a defense into your portfolios. Too many times I've seen traders, they would just have growth stocks only. They won't have any gold stocks. They won't have any Coca-Cola. They won't have any Dividend Kings or Aristocrats in their portfolio. And then they wonder, like, why is my portfolio so volatile? Well, if you only have growth stocks, that's a part of the name. Growth stocks are going to be volatile. So to offset that, you may need to put in some stabilized dividend stocks that are just solely to collect the dividends. If the price goes up, perfect. The dividend goes up as well. It's proportional, but still, having these dividend stocks added would definitely help. All right, but again, this is their dividend yield. They've been pretty good. And if we look at their chart, we see that on the daily, they're down a lot. So they're down back. Let me annotate. So if we look at it, they're all the way down back to this support. So they broke through that support that was set. We see that we had a bounce and change of direction a couple of times, but touched here, touched again, and then you can count this as your third touch within this time period. So now that's that was our support. We're a little bit below it, and we may come back above it. But if you look at that RSI, it's at 23, so it's oversold by a lot. Eventually, it's going to come back up, and I'm going to show you what we can look at to predict how and when it's going to come back up. I'll show you in just a second. But RSI is extremely low at 23. Is it going to keep going down to a 10 RSI? I doubt it. Again, things like to stay within a certain range. If you look here, the last time the RSI dipped under 30, it corrected back up to 50. Dipped under or getting close to 30, it corrected back to 50. And then this time, it laid down and bounced around on 30 before dropping a little bit below. And we just need to find the support. So this support right here that was set, but everything that happened in the market last week, it pushed it right through it. And so now this will be the resistance to the upside. And we see that the MACD is separated nicely. This is going down. So if you would have played a put up here, again, the RSI was around 70. You could have played a put, and a put, for people that don't know, is a bet that the stock is going down. You could have knew that, okay, it can't survive around a 70 RSI, have to cool off eventually. This is a nice put to play from here to here on a swing down. So, but let me back out some. So what you can do is change the range. So if you change the range right now, it's filled the chart. So it's just going to fill the chart with information, but you can back it out, and let's set it at 5 years. We hit update. It's going to be a little condensed, but I wanted to show you this because now when we set, and it looks a little dense because we have 5 years on the daily, but when you look at this, you can still draw your support and resistance. And we see that if we annotate right here where we drew that that support before, we see that it bounced around a couple of times. We only had 3 times on the chart that we were looking at for that range, but if we look at it from this point, we can see that it bounced around a couple of times. And then the most important thing is, look what happened during COVID. During COVID, you know, it was on a high, it was running up, and then it just crashed all the way down here. People who bought it down here and had it ride up, and then once it stabilized right here, this is easy sell zone, because again, if you bought down here or anywhere in this area, anywhere 45, 47.50 and under, that's easy profit for you, even with this steep dip happening right here. So I'm showing you this to say that it's probably going to be going back up after we get around, again, maybe 57.5 around the top side right here. So 57.5 to 55 may be the top side. So if this continues to drop from 61.81, I'm waiting until maybe 60, because I think that it's going to rebound soon with that the 23 RSI. But again, we have to see what Monday brings. I've been watching Bitcoin, and it's pretty stable. I haven't seen any crazy swings up or down just yet. It could be happening now, but I haven't checked. But last time I checked, Bitcoin was stable. So this could be bouncing, and again, look how many times it bounced before in the same price range. So it could be bouncing again and coming in an upward direction, or it could finally break through. And then if it breaks through, then it'll be in a nice buy zone for us. Because again, the next time that it has a heavy support is around 55 to 57.5, and it's already at 61. So it's pretty close. But I wanted to show you the 5-year time period, so then you can get a real picture of what's going on. When you're looking at a dividend stock, you may have to pull out to 5 years or 3 years, because again, you plan on holding this for a while. You're not, I mean, you could buy this at 61 and want to swing it up, let's say by the end of the year, but it may only be at, let's say 65, and you want it to get to 70. So it still may take a year while holding it. And again, you're getting paid dividends every month with this one. So it's a really popular one. But do I have any questions about this one so far? I'm gonna change the range back. All right, cool. So this one is on the dividend tracker again. It's going to generate the name, and we talked about the dividend yield and yearly payout per 10 shares. So each one of these are per 10 shares. And now let's move on to some Dividend Aristocrats. So I first want to give you this. Let me pull this over. All right. So again, going back to this one really quick, I forgot something. So again, this is a REIT. So it's a real estate investment trust. If you need to know what a real estate investment trust is and how they work, how to invest in them, I have this REIT Investopedia. I guess this is an article, and it has a table of contents, and it breaks down everything with REITs. So you can understand tax implications. You can understand why are they able to pay like this. You can understand what a REIT is and the different types of REITs. They have a couple of types of REITs. They have hybrid REITs. There's a lot. So you can check this article out if you're interested. I'm gonna put this in a chat for you. 1 second. All right, so that's in the chat for you if you want to read up on real estate investment trust. But I definitely think they're good to add to your portfolio. And depending on what's happening in the market, like all of the real estate investment trusts aren't just in the real estate sector. Some of them are considered other sectors depending on what they represent and what they house. So for instance, you can have a utility real estate investment trust, or you can have energy real estate investment trust, or a warehouse real estate investment trust. So it's a lot of different kinds, but this one right here is property. But yeah, check that out. It's a lot of good information, and it'll help you understand what REITs are. All right, so the Dividend Aristocrat. So we're looking at Procter & Gamble is one of the Dividend Aristocrats. Also have T for AT&T. But let's look at Procter & Gamble. And what I want to do, I have another article for you all. This is the list of Dividend Aristocrats. So the Dividend Aristocrats have 2 criteria. 1, you have to be in the S&P 500. 2, you also have to have increasing dividend payments for 25 years. I want to say, make sure. Yep, because a king. So if your company is a dividend king, that means that it's been increasing payments for 50 years or more. But again, growing dividends over 25 years and being in the S&P 500 will get you on the Dividends Aristocrat list. So as of June 22nd, 2022, these are the 65 Dividend Aristocrats here. And you can check this chart out, and you can check them out and see which stocks you like, which stocks you already know of, because some of these companies, again, we have McDonald's, we have Walgreens, Lowe's. These are companies that we see every day. Walmart, Pepsi. I mean, again, Johnson & Johnson, Colgate, Coca-Cola. These are companies, again, that you see every day that you could be invested in to help stabilize your portfolio. I'm not saying that you have to make a whole portfolio of dividend stocks or Dividend Aristocrats. You could, but these are definitely good to interject at this point, especially when everything is low. When they go up, the dividend yield and payment will go up as well. So let me give you all this article. Hold on. This as well. All right, there you go. So now you have a list of the Dividend Aristocrats, and you can read through. And it has a little bit of information that tells you the criteria, how they work, the changes for 2022, moving forward to the different stocks. So what I did was pick my favorites off the list, and I really like Procter and Gamble. I mean, they have their hands in everything. I was doing research on them about 3 weeks ago. I found out a couple of companies were basically on their portfolio, like they own them through other companies. And I'm just like, man, they're forever reaching as far as in the financial sector. They're just buying up everything, and they're paying dividends. So I mean, definitely a good thing. And right now they're down. Right now they're at 135.58, and it looks like they have some more room to go down to about 130. But the RSI is 1 second. But the RSI is about 36 at 36.89, and it's starting to stabilize. So I will wait to see if it comes down some more. If it comes down to about 30, we see that it bounced twice off 30 before going back up to 50. And we see back here, we had a 30 again. We had another 30 again right here. And every time it went down to 30 or a little bit below 30, right here, we had a bounce. So it was a bounce here, and a bounce here. So if we can get it back down to 30, perfect time to buy in. And then you have to decide, do you want to sell at the 50, or do you want to sell at the 200? So we see that at the 200, when we finally broke above 50, we broke above 50 quite a few times, but we still couldn't beat that 200. We went up against 200 right here and just sat there for a few days, and then just gave up and came right back down. So this is definitely a good one to look at. And again, not only will you be swing trading and making money off the shares going up, but again, while you're holding and waiting for the swing trade to play out, you're getting paid in dividends. Now, Procter and Gamble, they pay dividends quarterly, so you'll be getting a dividend payment every 3 months, which is, from my research, I found that more companies like paying on a quarterly cadence than paying every month. Oh, they've been paying every month, I think for like 30 years, I want to say. But they've been paying every month for a while, and that's one of the major ones that I depend on if I'm looking at monthly payouts. But again, most of the time you're going to see quarterly, and again, this one is in a sweet spot. Now let's look at the MACD on this. If we look at the MACD, look how close that is. I thought we would have a MACD crossover when we got this pop right here, because we bounced off of 135. We bounced up. That was the support. That was the floor. We bounced up. And I thought we were at least going to touch that 50-day moving average, but we didn't. We got close. We got a little bit above 140, and then we came back down. So we came back down. We tested that support again at 135. And if we can close below it, then this MACD crossover won't happen. But I think that once we get a pop, the only thing we need is a small pop, because they're parallel. Then we can get a punch to the upside, and then we can probably test that 50-day moving average again. And again, if it's a swing trade, you don't have to worry about time decay. You don't have to worry about anything happening to your money while sitting in this trade. And while sitting in the trade, you're also getting paid dividends. So, and yeah, again, this is on the Dividend Aristocrat list. Do I have any questions about Procter and Gamble? And we can look at their weekly too. But do I have any questions? All right, cool. So let's look at their weekly real quick before moving on. If we look at the weekly, we see that it's been weeks of sales happening. We had 1 week of buys in between, but over the last 5 weeks, we can call that a month. We've had only 1 week of buying, and that's why this MACD looks like this on the weekly. But again, at some point we have to turn around, and I think that we're bouncing. If we drop below again to 130, which we dropped to 130 here, and we see this crazy reaction on this large white candle. So we dropped down to 130, and then the next week we closed right under 145. So that's a good dip that you could have bought around 130 on Procter and Gamble, and then sold about 2 weeks later if you're looking for a swing trade. So now we're going back to test that range again. If we break through down to 130, and then the closer we get to 130, the more likely we are to have a pullback, and then we can see a bounce to the upside. So Procter & Gamble, again, definitely a good one to add to your portfolio. If you're looking for a stock to add and never sell, this is definitely one of the good ones. And if you're looking for a stock to swing trade, this is also a good one as well. It's not too volatile. But do I have any questions? All right, cool. Let's move on to the next Dividend Aristocrat. So on here, well, it's a lot of them on here. Let me see if I can find it. Where's AT&T? Is it towards the top? I don't have time to break all this down. But yeah, so we have AT&T. It's a Dividend Aristocrat as well. And they've been dropping. Look at this. They bounced up. They went to about 21 twice. Forming is not a clean double top, but that's a double top. And then we had this drop to support, and then it dropped even lower. So let's back out and look at the weekly. And again, we're looking at buying and holding this for its dividend. But this one, you can also play puts on it. Now, if it drops below this $16 range, let me show you something here. We're going to do a 5-year update on this one. So if it drops below this $16 range, this is going to be the lowest it has been in 5 years. So every time it gets to that range, we see a pullback and a swing to the upside. For instance, we had a drop right here. This is COVID. It popped back up. It got really hot and ran up here. So it dropped to about 16, ran all the way up to about 24, 25. And again, you were able to collect dividends. They pay quarterly dividends as well while holding the whole time. Then they dropped off again, which opened up another buying opportunity. And eventually they ran right back up. They didn't get as high, but they reached back up to 23.5 instead of about 25 this time, which would have created another opportunity. Then they dropped again. And you know what happened again? They reached this zone again. Every time they reach around the zone, another pop to the upside. So right now, they're down at 16. Again, I say it's a good thing if they drop and pull down even more, because long-term, looking from a long-term perspective, you can buy once they pull down a little bit more, because we see that they like to bounce and pop from these buy ranges and these prices. And again, while it's going back up, you can also collect dividends on the way up, and they pay dividends quarterly. I have them. Where's it at? Yep, I have AT&T here quarterly, and they're paying a 6.93. So I'm going to tell you this. I had a conversation a few weeks ago about dividends, and they're like, somebody asked me, what's the average dividend yield? Like, what's a good dividend yield? How do you know if a company has a good dividend yield? And I said, well, honestly, a good dividend yield by Investopedia, by their information, they're saying that 3% is a good dividend yield. So a lot of people like 3% is low. But when you think about companies that are able to continue to pay dividends for 50 years, they're not going to have for instance, this dividend yield right here is 26.71. That's not sustainable. They're not going to be able to pay 26.71 for, let's say, 20, 30 years to become an aristocrat. It's not going to happen. But if you're looking for something that's going to give you a punch, let's say for the next 12 months, 26.71% is incredible, honestly, because again, the average is 3%. You can see that we have a 1.37% for Ecolab, but again, they've been paying for almost forever, pretty much, for some of us. So that's what I want you to pay attention to. But again, AT&T, people love this for its dividend, and I think that if it pulls down even more, then this would be a good time to look at adding them to your dividend portfolio and add some stability to your portfolio, especially if you're heavy on growth stocks. Do I have any questions about AT&T, Procter & Gamble, or the Dividend Aristocrat list? All right, cool. So let me keep moving. All right, this one is Ecolab. Oh, what is this? Oh, it's already set on 5 years. I was like, okay, why is it looking like this? All right, so Ecolab, they're basically a company that helps with infections, and they fight for hygiene and infection, and then they create solutions that prevent infections and hygiene related issues. So They're a pretty good company. From what I've been watching and researching, I've been watching the press on them a lot because Bill Gates, he owns 10% of this company. I'm always looking at the companies that Warren Buffett and Bill Gates have shares in. I just like to see why they pick these companies and what they expect the companies to do. Just to pick their brain as an investor to see, okay, what do you see in this company? So I've been watching this company for a while, and I've actually started buying partial shares. I've been slowly moving in because I think that, again, we may get a little bit lower because we see that once we got down here, we had a pop. This drop right here is COVID. And then it went up here, and then we had another pull down. So I'm waiting for it to pull down some more so I can buy in some more and then get those dividends rolling out for this one. So right now, again, I started buying in partially because I'm waiting. And then also, if you look at this, it looks like a MACD crossover to the downside is about to happen. So that's why I'm waiting as well, just to see what we're going to get. If this bounces, if these two touch and then they go in separate directions, meaning that the crossover doesn't happen, then we'll see the stock move back up. But buying this stock around 140 and selling it around 160, around 170 would be ideal. So I just wanted to come down a little bit more. 149 is a little too high to go all in, but I want them to come down a little bit more. And I think they will if we get this MACD crossover right here. But this one, again, if we're looking at how much they paid 1.37%. Again, if you're looking for some stability to your portfolio, also with the swing, you can swing them. And then while you're holding and waiting for the swing to play out, you're going to get that 1.37% dividend yield. You might say that's not a lot, but getting it quarterly is a nice thing to have. And this tells you almost how volatile the stock will be. So Ecolab normally isn't volatile unless they have some crazy news from what I've seen. Again, that this is COVID. COVID did this to everybody, but it recovered nicely, traded around this zone, went up a little bit, and then just traded around the same zone before they had some bad news, pulled them down to the 200, and then they picked this zone right here between about 180 to 140, and they're just scribbling around in there until we see what else is going to happen. So if we get that MACD crossover to the downside, I'm praying that it happens. I hate to say that I want the stock to go down, but I want this to go down so I can buy in at a decent price and just buy and hold and add it to my dividend portfolio and get the dividends on the way up. But yeah, so that's Ecolab. Do I have any questions about Ecolab? All right, cool. All right, the crazy one. Let's go to the crazy dividend yield. So we've covered all these other ones. Function morning. But if we look at IVR, Invesco Mortgage Capital, they pay quarterly, and they're paying 26.7% dividend yield, which again, that's crazy. And they probably can't sustain it for a long time, but it's decent to have for a short period of time, especially in a time of unpredictability like this. We may be going to war. We got, Russia changing their mind every day or doing something different every day. So we got to watch that. And then we have the Fed and Jerome Powell just trashing the market every chance they get with the high interest rate spikes. So having this dividend is definitely a nice thing to add. 26.71% is crazy. But let's look at this chart. So if we check the chart, and this is on the daily, let me see my range. Okay, this is normal daily. All right. So if we're looking at the daily right now, RSI is at 2374. Last time the RSI pulled all the way down to about 10, almost 10, before it bounced all the way up to 70. So if you would have bought down here and held, just imagine buying and holding, because again, you're getting paid a large dividend percentage. The first time I looked at IVR around COVID, I think I checked it out around COVID, they were only paying about 9%. But right now they're paying 23. They're trying to attract more investors back to them. And again, if you would have bought down here, they shot all the way up to 70, which is an easy buy and sell. And you're collecting dividends all the way up. So now they're back down to about 23.74 is the RSI. They're a little bit below the $16 point at their 50-day moving average. And right now at 1348, we're right below that support that we set at 14. So now 14 is going to be your resistance. So if this decides to turn around and go back up, let me annotate here. So if this, I didn't pick it right, horizontal. All right. So you set that there. And if this decides to turn around now, it has to beat that 14 because we see that 14, once it came up, it just traded in between 14 and that 50-day moving average before it broke out and moved up a little bit higher. So once it's coming down, it's looking like 13 is going to be the support, but that's only if you're looking at the daily. Let's check out the, let me look at the weekly, get a larger time frame. All right, so let's look at a 5-year. Again, that's why I say with these, they move so slow sometimes that you might have to pull out 10 years and check them out. But yeah, look at that. So they're all the way up here, came down. People who bought down here around 10, we had more spikes back up. It hit a, this is a 41.91 as a 200-day moving average. It touched and came right back down. And now we're down to the lows again. So we may see this. It looks like it's making a head and shoulder pattern. So we may see another spike around in this area, another bounce, because we had, let me put it right. Oh, I'm not annotating. Hold on. So right in this area, about at 15, we had a support. It broke through it. And now that's going to be the resistance. If you're looking at it from this at the weekly time scale, I know on the daily it was about 14. This one is about 15 if we're looking on the weekly, because we pulled all the way back to about, this is COVID-19 era. And so now if we complete this head and shoulders, it's probably going to pull us down to at least, this is about, oh no, we're already at 13. So this is at about 11 or 12 in this area before we may see another bounce. What I would do is DCA, or dollar cost average, for those that don't know. I would dollar cost average, which means that once it gets in this area, if it decides to pull down some more to 10, what you can do is continue to buy shares, because we know that the closer we get to 10, the more likely we're going to have a bounce. When COVID-19 happened, one of the worst things that happened within the last 2 or 3 years, it dropped as much as it was going to drop, and it stopped right at about $10 before recovering. Again, we even had a spike up to $40. So now we're at 13. Again, once we get down to about 12 or 11, then I'll start buying in. If we get a pop back up to 15 to test that 15, I'll go ahead and sell some shares at 15. But I still want to hold this for about 5 to 6 years to be able to collect the dividend yields off of it, and then I'll go ahead and sell my position. So right now it's coming down. Again, we have a 35 RSI, but we're not going to go straight now with this one. We might have a hiccup back up to 15 to make another shoulder. Then once we come down to 10, we should be all right. So looking at this, we do have a potential MACD crossover that's really close. That's why I'm saying that it can come down some more. And once it comes down some more into the buy range, again, I'm looking at maybe 11. Maybe I want to come down a little bit more, and then I'll go ahead and start buying in and collecting the dividend. So do I have any questions about IVR? I know this one's a little crazy, but I think the dividend yield is definitely decent. Let me check to see if we have any questions. No questions. All right, cool. So, check this. All right. So that's the end of the dividend stocks that I have. Do I have any questions about dividend stocks in general? And again, if you want this tracker early, just drop your email. You can send it to us if you're in Meetup, or if you're in the Discord, you can just shoot it to us, or you can drop it here in the chat, and then we can go ahead and get this tracker over to you. If not, once the dividend course comes out Friday, this will be added along with it. And also for the Discord members, if you're in the Discord, you will be getting it half off. So if you're outside the Discord, you'll be paying full price, but Discord members, you only will pay half price for the course. So if y'all have any questions again about dividends, and I'm probably going to go over dividends again next Sunday, because we have Dividend Kings, which again, that's 50 consecutive years versus 25 consecutive years of growth. And we can add those to the list, and then we'll add in some other growth stocks as far as looking at Tesla and Apple and the S&P 500. But do I have any questions about anything? Stop presenting. All right, cool. So that's all that we have today. What I'm going to do is, if you need a demo of the Discord, we can go and do a demo of the Discord. I can show you what it looks like, and I can show you the different features and channels that we have within it. And again, if you're looking to join, it is only $25 a month right now, but starting November 1st, it will be $40. So if you get locked in at 25, you're good. But if you get in at 40, you're still good, because we're probably going to hike it up again within another year. So we'll probably try to move it slightly up every year. So, but what I'm going to do is, someone had a question, Jai. First time love here. We appreciate that. We appreciate that. We've been doing this since, what? It'll be a year, October 25th. So every Sunday we're in here and we're talking about stocks, and we're just breaking down stocks and learning more and becoming better investors and traders. So again, what I'm going to do is walk through a demo of the Discord. And right now we're also doing 7-day free trials. So if you're interested in joining, you can sign up. It's a 7-day free trial. If you don't like it, just cancel it on day 6 or whatever day you find out you don't like it. But if it goes past day 7, it's going to go ahead and take that payment from you. So let me add the link one more. Oh, the link is actually in the chat. Let me see. Put it here. Yeah, okay. So the link is here. Just put it in the chat, and let me open the Discord. Give me 1 second. And also, this recording, while I'm doing this recording will be on our YouTube channel, and it will be in the Discord. So it always is gonna post in the Discord first, because it's easier, and then later on it will be posted in the on our YouTube. It's just YouTube takes longer to upload and have all these rules, and you know how YouTube is. But it's gonna be on our YouTube, but it will be first in the Discord. So let me get the Discord open. Give me 1 second. Oh, and I can also stop recording. Stop this recording. We can go ahead and get it ready.